According to the Securities Lending Desk here at Interactive Brokers, these were the securities that were the hardest to borrow in each sector the week of July 26th. The general definition of a hard-to-borrow stock is that the short seller is not able to borrow the stock at a rate comparable to the benchmark, or overnight bank funding rate for U.S.-based traders. However, in the tables shown here, the Securities Lending Desk at Interactive Brokers took it a step further. They looked at all the stocks that clients were trying to short and how successful they were at getting a locate over the course of the past week. They looked at the number of customers who were rejected and how many were given subsequent locates after the initial rejection. In the end, they compiled a list of the stocks that traded at expensive borrow rates and were often difficult for clients to receive locates on. This is one of a few charts from our Securities Lending Desk that we publish every week on our Traders Insight blog, and today we wanted to look at one of the hardest to borrow names in the financial sector, Bitcoin Investment Trust, or BIT for short. Created by Grayscale Investments, the Bitcoin Trust is classified as a private investment vehicle and is traded over the counter rather than on a traditional exchange such as NASDAQ or the New York Stock Exchange. It's important to note this vehicle is not subject to the same regulatory requirements as SEC registered exchange traded funds or mutual funds. The fund is not investing in companies that could profit off of Bitcoin, but the actual Bitcoin itself. Started in 2009, Bitcoin is the largest and most popular cryptocurrency with an over $47 billion market cap. And while there are nearly 1,000 other cryptocurrencies, Bitcoin is larger than the next 10 combined, including Ethereum, Ripple, and Litecoin. The investment trust inception date was September of 2013, and many see it as an easy way to get exposure to Bitcoin. Per Grayscale's website, the BIT enables investors to gain exposure to the price movement of Bitcoin through a traditional investment vehicle without the challenges of buying, storing, and safekeeping Bitcoins. The fund charges an annual fee of 2% for that convenience. As expected, this is a volatile name. The BIT touched $565 in May and had a 52-week low of $74 in August of 2016. There are 1.9 million outstanding shares, and the price to buy one share of the fund is $472, but the underlying net asset value of the fund is $252. Put another way, the fund is trading at a premium of over 86%, meaning the $882 million market cap of the fund is nearly twice the amount of the value of the Bitcoins the fund owns, which is $472 million. But it has been trading at a hefty premium since May, and on May 31st, trading at 132% premium. So that may not be a reason enough for the shorts to gather. According to Interactive Brokers Trader Workstation, the securities lending fee rate is 8.1%. It's also important to note, because of the volatility of the underlying Bitcoin asset, the numbers used here are as Friday morning, but they can change quickly. Thanks for joining me on Traders Insight. For more market commentary, visit us online at ibkr.com/TI.